If you spend 5 minutes on social media, you will probably think trading is the easiest way to make money. Screenshots of big profits, luxury cars, luxury watches, but that's not the reality. It looks like everybody is making money, but that's not the truth. Before we learn charts and indicators and understand how to execute trades, we need to understand how trading reality is. This lesson might be the most important lesson in the whole entire series. A large proportion of new traders, especially in a leveraged market like Forex, they're losing money on a constant basis every single day in the market. Many regulated brokers disclose that their retail traders are losing money and their account is always declining, although the exact percentage varies by the market and the broker. One of the main reasons why beginners are losing money is because they don't have enough education. Let me tell you this. A person who wants to become a doctor needs to go and study at university for 9 years to be able to learn how to become a doctor. Or an engineer has to go to university for 4 years to get a certificate. But when it comes down to trading, people think like, okay, I can go trade today without any education. They go to market, they start executing, buy or sell without having any strategy, without having zero education. So that's number one reason why many traders, especially beginners, lose money on a constant basis every single day. The second reason why many people lose is because of no risk management. Risk management is the key in trading. If you don't know how to do or how to manage your risks, you are in danger. You're going to lose a lot of money. And when you lose that money, essentially there is no reason for you to lose it. Simply you are over leveraging, and that's why you are losing the money. Over leveraging is an issue because a lot of people who wants to create an account on their broker, they look for having a very high leverage. For example, they want to have 1 to 1,000 or 1 to 2,000 leverage, versus professional traders, they do not need that. Maximum they need is 1 to 100 or 1 to 500 even is already too high. So what does this 1 to 100 or 1 to 500 mean? I will explain a bit later in another video. But essentially what you're trying to do is that you are trying to borrow some leverage from your broker and use that leverage to make money. Most of beginners make emotional decisions. Say for example, they enter a trade and if they lose, they are going to enter the second trade so that they need to make that money that they lost back. This is called revenge trading. You want to make the second trade so that you will make back the money that you lose. Now, in most of the cases, when you take the second trade, you might lose again. That means you are putting yourself and your account in danger. A lot of traders, when they enter a position, they have unrealistic expectations. For example, they would risk, say for example, 100 euros and they want to have or they want to get a return of 400 euros. That's not that simple. Market doesn't always give you opportunities that you would get, let's say, 1 to 4 risk to reward. On a constant basis, professional traders look for trades between 1 to 1 to 1 to 2 risk to reward. This is very, very common reward that the market usually gives. Now, don't get me wrong. There are a lot of times opportunities that give you even 1 to 10, 1 to 20 risk to reward. I have seen this kind of trades. I have learned them. I have even taken those type of trades in the past. But these kind of situations are very rare. So having a realistic expectations of what your trade is going to give you is very important. That helps you not to make emotional decisions, that helps you not to become greedy and make sure that you get the right amount of profits. A lot of people start trading because they're looking for a shortcut. For example, they don't enjoy their work, or the job that they have is very difficult for them, or they don't know how to run a business. That's why they come in and trade, because they think trading is simple. Because when you look at social media, you look at all of those fancy cars, massive profits, and those expensive watches, you think, okay, why not? I can do it too. And you come to the market, and then you start to realize that that's not truth. A big proportion of people are losing in the market on a constant basis. People don't fail because trading is impossible. People fail because they approach it the wrong way. Now, that's why in this series, I'm going to teach you how to approach trading from zero to hero. That's very important to understand what are the realistic expectations, how to start a trade, what should be the psychology behind trading, and how to end the trade. The biggest beginner mistake in trading is trading without a plan. Every single trade that you execute, you have to have a plan behind it. You always plan the trade and then trade the plan. That's how trading is done. You don't just go to market and look, oh, it's going up, so I'm going to buy. Oh, it's going down, so I'm going to sell. That doesn't work like that. If you even make profit, I have seen people who actually have done that. When they see the market is going up, they just buy. When the market is going down, they just sell, and they do a lot of positions. They might take even 100 positions in a day. I can tell you, they are losing on a constant basis. That's not how trading is going to work. Say for example, right now today is 1st of August 2026. During the past month, July, there was 21 or 22 trading days in the whole month. I took a trade only 4 days, only 4 trades in this month. And all my 4 trades were positive, and that's why the whole month was positive for me. So I showed up every single day to the market to analyze what's going on, if there's any if there's any entry, if there's any opportunity for me to enter the trade. A lot of times there were opportunities that I didn't take because I didn't like the trade, and then the trade actually reversed, and I was like, wow, I just escaped a big loss. And there were other days that opportunities was happening, but it was not happening exactly as I was expecting, so I still didn't risk. Why? Because when you're trading on a live account, you want to make sure that you are not going to waste it. You want to make sure that you make a profit. That's why you need to build up your confluences for every single trade. So we don't enter a random entry. We have to make sure that we plan the trade and then we trade the plan. Second thing, which is very, very, very important, is risking too much. Most of people risk too much. They over leverage. That's why they lose. Their whole account, for example, is dependent on this trade. This is absolute beginner mistake. You will constantly lose when you make this type of decisions. One trade should not determine the future of your account. You need to understand what is the threshold, what is the amount that you can lose before entering a trade. That's how you need to think. So if your account is 1,000 euros, how much can you lose? How much can you risk per one trade? For example, you can say, I can lose 10 euros. That's totally fine. Then you only risk 10 euros. And if you lose that 10 euros, you don't care after that. You're going to do it again without a second of hesitation. That's how you need to trade. So you need to understand your risk tolerance. How much can you lose before you enter a trade? So you are entering this trade, you know that you're going to lose this money, and if you lose it, you don't care. You're going to do it again. So that's the way you need to think. That's the way you need to make sure you're risking. The third beginner mistake is overtrading. A lot of people just trade 10 times a day or even more. That's not how you make money. Professional traders take maximum 1 or maybe 2 trades per day. That's the maximum trade you take. There is no professional trader that would take, or at least I don't know any professional trader that would take more than 2 trades per day. Why? Because if you're taking more than 2 trades per day, now think how many confluences you have to build to enter each trade. So essentially, you need to work a lot of thinking. You have to think a lot. You have to build a list of confluence to enter that trade. And believe me, after 2 trades, you simply cannot analyze the market properly anymore because your mind is already cooked. You can't have the ability to analyze the market deeper. Why? Because now you have your emotional engagement. You have already maybe made money or lost money. You might want to do a revenge trade. You might not be ready to do another analysis. So you cannot trade more than one or two. So for me, for example, it's basically impossible if I trade more than 2 trades a day. So if my first trade wins, that's it, I'm out of the market. I show up tomorrow. There's no point for me to give that money to the market. So the market comes at you no matter what. It doesn't matter how much money you make. The market is going to come at you. So if you make money, close the shop, show up tomorrow. Don't lose your money, don't give it back. Now, if you lose the first trade, so that's sometimes with me. If my first trade is a loss, then I maybe take the second trade if the market gives me the opportunities, the list of compromises again. Now, the second trade, if I win, very good. Most probably it's either break-even day or a tiny profit, depending on the strategy and depending on the setup, of course. Or if the second trade is also a loss, that's it, I'm out. I just close my computer, I just go live my life, do something else. So more trade doesn't mean more money. Most of cases, more trade means less money because you are leveraging all the time. Every single entry is a risk. You put yourself in a situation that the market can take it from you. You have this hope that, okay, I want to make money, but every single time you risk, you're risking your capital, you're risking your emotions, you're risking your life. And if you lose, then you're gonna come at yourself and insult yourself for the rest of the day. It might even ruin your day and you might not be able to do anymore, nothing else. So don't overtrade. More trades doesn't mean more money. More trades means market has more opportunity to take money from you. So you need to be smart. You should not allow the market to take money from you. If your first trade is a win, it doesn't matter if it is a small or big, it doesn't matter. A win is always a win. Take it, close the shop, show up tomorrow. Now the fourth biggest mistake a beginner does is chasing losses. They come to the market, they make a loss, they want to get it back immediately. That's a big mistake. It doesn't work like that. You come into the market, you already gave money to the market took that from you. Now you're emotionally unstable. Now imagine how disciplined and how structured your mindset must be so that when you want to enter a second trade, you must be 1000% sure that you're gonna win. Otherwise, it's gonna be like 2 losses back to back. So you're completely becoming emotionally unstable. You're not in a position to make any more logical decisions anymore. So chasing losses is the biggest mistake that you can make. Trying to recover from the losses quickly, but in reality, it's the opposite. The next topic I want to talk today is about the reality about prop firms. So a prop firm is an organization, could be a person, that provides you, or they promise to provide you a live capital at the end of the day. Say for example, you purchased a challenge account for 50,000 euros. And the challenge can have different modes or different options. It could be a 1-step challenge, it could be a 2-step challenge, it could be a 3-step challenge, or sometimes you can just purchase upfront the capital, which is, let's say, 50,000 euros. Now, a 50,000 euros account, so for example, you can buy maybe, I don't know, $100 or $200, whatever the amount is from that prop firm. And then say, for example, there are a set of rules that you have to follow. If you follow those rules and you pass the challenge, then the prop firm is going to give you that capital so you can trade with their money. Essentially, you are their trader. They provide you the capital, you're the trader, and then at the end of the day, you can have withdrawals with a split, maybe 80%, 20%, or 90% and 10%. First thing first, passing an evaluation doesn't guarantee a consistent success for you. Why? Because you can pass an evaluation. For example, they provide you a capital live account, and then during the next month, if one of the rules break, if you break one of the rules, game over. Your account is off. It doesn't work anymore. So they're going to take it back. The second thing is they put extremely strict rules. For example, you have to have consistency rules. For example, you need to make sure that you trade every day, as an example, or this and that. So, for example, you cannot make huge profits and you have to make smaller profits in a constant basis. You cannot make withdrawals whenever you want. You have to make withdrawals, I don't know, once a month, for example. Many people underestimate the discipline behind these requirements. The amount of discipline as a trader you should have behind these requirements is very, very advanced, very, very strict. A funded account is not a free money. Essentially, the prop firm is trying to leverage that money to make their money. So how is the prop firm's business model? Essentially, they're making money in two ways. Number one, they get upfront payments from you when you purchase the challenge. When you purchase the challenge, what prop firm does, they're going to give you a simulated account. An account which has just a made up number and it's not real, it's a demo account. So they just create an account on their server, which is for free for them, and then they just give you access to that. And number two, how they make money is the profit split. Say for example, if you make 10,000 euros profit, then you might take 80% of that profit and then the prop firm takes 20%. But remember, this is very, very important. Prop firm challenges are designed for you to lose. I repeat, prop firm challenges are designed for you to lose because that's the way that the prop firm is making money for themselves. That's how prop firms are profitable, from your money when you buy a challenge account. Now, prop firm has also different categories. They can be prop firm type A or type B. Say for example, type A are those kind of prop firms that are actually give you a funded account. That means they have actually the capital, say for example 50,000 euros, and they actually give it to their traders. And type B are those kind of prop firms that they actually don't have the capital. So what they do is that they make money on a constant basis by selling the challenge account, and they know most of the people who buy those challenges are gonna fail, and they're gonna basically make money out of that. And then maybe they have a bunch of traders who are actually successful, so they make that money from selling the account to pay out for those successful traders. So that's why, for me, I never recommend anyone to use any prop firm. That's my personal opinion. I do not use any prop firm account, and I would never recommend anyone to use any prop firm account also. You need to always trade your live account. You can deposit money whenever you want. You can withdraw money whenever you want. So now that's up to you to decide. Yes, you need to risk your own personal money, your hard worked earned money. That's correct. And you can lose that money. For example, say for example, you want to risk 200 euros this month. Yes, that's your money. And you could spend that 200 euros on something else in your life, right? But you want to be free. You want to run your own business, which is in this case trading. So you are basically risking all that 200 euros and you are thinking like this, okay, I'm gonna lose this, all of this money. I wouldn't care. I would do it again. But remember, in my opinion, it's always best to trade with your own personal capital because you have the full 100% control over your money. Over the funded account, you have no control. The prop firm is in control of that money. The next topic I want to talk about today is the social media. You see a lot of gurus out there with Bugattis and Lamborghinis and Ferraris, very expensive watches, nice whip and crib, and at the end of the day, what they're trying to do is to sell courses. That's their business. So all of those gurus, the guy is 18 years old, figured it all out his entire life. He's driving a Lamborghini SVJ, which cost €1 million, and he is a day trader. That's what he called himself. I'm sorry, you're not a day trader, you're a course seller, you're a marketing person. You happen to sell trading course, which actually doesn't work. Most of those trading strategies, and they market as 100% working strategy, in reality they have maybe 10%. Their strategies usually work 10%. Why? And that's the reason they have to sell course. Think about it. If you are a profitable trader and if you are making very good money, why do you need to have a Discord channel? Or why do you need to sell course? Or why do you need to sell bootcamp? What's the point? You are a profitable trader. You're driving your Lamborghinis and Bugattis, so clearly you can afford things, right? Why do you have to sell a course, or why do you have to have a paid community? Why do you have to sell a bootcamp? What they're doing, they usually post screenshots of massive profits. Let me tell you this. A profitable trader never shows you how much money they make. Why a trader should show you P&L? So say for example, I make 1,000 euros today. What's the point of me showing you what profit I made? If I made money, that's for me. It has no value for you to understand what money I made. There's no point. I am not giving you any value if I show you my P&L. If I lost money, bad for me. If I made money, good for me. What's the point for you? But if I show you the decision why I entered this trade, I show you the chart, I show you my position, and I tell you the reason why I made that decision to enter a trade, then I'm trying to provide you value. But if I show you my P&L, it's pointless. There's no reason, there's no value for you. In 90% of the cases, those P&Ls are from demo accounts. Just demo accounts. The guy is making hundreds of thousands of euros every single day in the market. That's possible. That's absolutely possible. But I promise you, those traders who are actually making money, they never show their P&L. Think about it. Have you ever seen, let's even talk about something else, not trading. Have you ever seen any famous top-notch Hollywood actor to show you how much money they have? Or what's their VIP and their crib? Or where do they live? Or how many cars they drive? They never do that. People who are actually rich, they try to show themselves simple. They have a simple life, they wear simple clothes, they speak very normally, and they never tell you how much money they have. They never show you their P&L. They never show you how much money they make. Sometimes some interviewer asks them, okay, how much money or how much profit you made, and they might answer that. But they never come to you and brag to you, oh look, I made 100,000 euros today. That's common YouTube video or on Instagram gurus that you see, today I made this much money. Yesterday I made that much money. Forget about those. Those are just made up. They are just telling, or they're just trying to sell you the dream so that they can tell you or sell you their course, so that they can sell you their bootcamp, so that they can sell you their Discord community. So forget about those gurus. There are genuine, successful traders out there, don't get me wrong. And there are those social marketers out there whose primary business is content creation. That's it. The guy is making money out of marketing. Essentially, they are a marketer. They happen to market trading course, Discord community, boot camps. Professional traders are making money on the market every single day, and they're making living out of it. But they never come and brag about it. That's the key thing you need to understand. So if you are in your trading journey, the first thing you need to do is to set realistic expectations. Trading is not get rich quick. You are there for the long term. Trading is skill, patience, probability, risk management, and continuous learning. That's it. The moment you figure this out, you will become a profitable trader, and I promise you, you will enjoy your life after that. The goal is not to double your account after every trade or after every week. The goal is to become consistently disciplined over a long period of time. So if you follow this series, first thing first, try to learn everything properly. Try to learn, analyze, don't trust whatever I say, do your own due diligence, understand everything by your own. If you need to read a book, if you need to read something else, just do it. If you're a beginner, for the first 2 or 3 months, I would recommend you to try on the demo account. Why? Because the first 2 or 3 months, you more or less don't know anything about it. You need to understand basics of everything that I will explain in this series. Don't rush into live trading. Don't think you're behind. Time doesn't go anywhere. You're not behind. You're not ahead of anyone. You are exactly where you must be. And most important thing, focus on consistency rather than excitement. Now that we know how trading actually looks like, we are ready to explore the markets. In the next lesson, I will be talking about tools that we could use for trading, such as Tradingview, MetaTrader, how to choose a broker, etc., etc. And that's it. I will see you in the next lesson.